Hi, welcome back to Oak Business Consultant. Today we are back with a new model, Baking Subscription Box Excel Financial Model. In order to review this model, we are going to go through these different sheets. But before we review this model, please note that these P cells represent the assumption cells and these gray cells represent the link cells. First of all, starting with the input sheet, we have included all the assumptions related to this business. Any client using this product can change these assumptions based on his or her business needs. So for instance, we have included the investment assumptions, loan assumptions, revenue and cost of goods sold assumptions, as well as capital expenditure assumptions, and much more. In the inventory analysis sheet, we have calculated in opening inventory values and closing inventory values for each month and for each product. We have also included the reorder point for each month. Then in the revenue analysis sheet, we have calculated the total revenue generated from each product for each month. Then we have also calculated the total revenue for each month. Similarly, in the cost of goods sold sheet, we have calculated the total cost incurred for each product for each month. Please note that this is a 5-year projection, so the total months in this analysis sheet is 60. Then in the website marketing expenditure, we have calculated the total digital marketing expenditure, or you can say the total marketing budget for this business. This is important because this business is an online business. In the expenses schedule sheet, we have included all the important operating expenses of the business. This includes payroll, your fixed and variable operating expenses, and your working capital analysis that includes the accounts receivable and accounts payable, as well as inventory. In the depreciation table, we have computed the total depreciation for each of the fixed assets for each month. We have also computed the net book value and the accumulated depreciation. Similarly, in the loan schedule, we have calculated the monthly payments for each loan. We have also computed the remaining balance for each loan. In the monthly income statement, we have calculated the total revenue, cost of goods sold, and net profit for each month. Then in the yearly P&L, we have calculated the net profit for each year. We have also included profitability margins such as gross profit margin and net profit margin. In the startup summary, we have compared the funding and expenses for the first year of business. We have also included graphs to make this comparison more easy. And then in the cash flow statement, we have basically highlighted the cash flows arising from the operating activities, investing activities, and the financing activities of the business, both yearly and monthly. Similarly, in the balance sheet, we have compared the current assets, basically the total assets and the total liabilities, as well as the equity of the company for both yearly and monthly basis. In the project evaluation sheet, we have included the company valuation computations as well as our burn rate analysis and our payback period analysis. In the diagnostic tools sheet, we have included the main ratios of the company such as operating expenses margin, profitability ratios, and much more. In the break-even analysis, we have included the break-even sales. This break-even sales computation helps the business to identify where it reaches the break-even point. That is the point where the business is generating no profit, no loss. Lastly, in the dashboard, we have included all the graphical charts for the financials that we have included in the previous sheets. This includes your profitability in dollars, your profitability in ratios, your cost of sales, your revenue for the 5 years, and much more. Thank you for your time.